We've seen a massive rally in silver over the last 12 months or so, and a lot of that has been driven by speculation really getting ahead of fundamentals.
Clive Maguchu, welcome to the business.
Thank you.
The price of silver, it's basically collapsed. What's going on?
Well, we've seen a massive rally in silver over the last 12 months or so, and a lot of that has been driven by speculation really getting ahead of fundamentals. And we've seen that drawdown in silver more recently, and it's coming back down more in line with fundamentals. But the main driver really behind that rally was the secondary play off the back of the rally on gold that we saw over the last couple of years.
Is there any rational explanation for so many people diving into gold and silver? Because there really was almost an exuberance to get into the precious metals market. Some people never even thought about it before. What was behind that exuberance?
Well, I mean, it obviously starts with the fundamentals. I think gold, as everyone knows, is a really great geopolitical risk hedge. And over the last couple of years, we've seen a pickup in geopolitical risk, and that's driven gold prices higher. And that led to greater interest from investors, and investors who weren't maybe so familiar with the story, and that led to speculative run-up in both gold and silver, with silver being sort of the secondary gold play over there. So, yeah.
The price of oil has come back to roughly long-run averages. And you could almost say that maybe oil will approach levels before the Iran war kicked off. I'm interested in gold and silver and how that connects with the falling price of oil, because it seems like oil is returning to the long-run average. Maybe gold and silver are returning to where they would otherwise be, and that we can say everything's returned to normal. Or is that wishful thinking?
It is a bit of wishful thinking. I think we do have a little bit of a peace dividend coming through in terms of the oil price, but we won't see oil go back to the prices that we saw before the Iran war. We think there'll be some lingering geopolitical risk premium still priced into oil, and obviously there'll be greater demand as we try to replenish some of those stockpiles that we've been using up over the last few months. So we do think oil will have a small premium in it for a little while yet.
I don't want to bend your mind too much, but is there a connection between oil, gold and silver in terms of geopolitics?
There is. I mean, they're probably at two ends of the spectrum given some of the geopolitical risks that we've seen. So oil's obviously had a massive boost from the Iran war, given that it was basically an energy supply and energy price shock that we experienced there. And on the gold and silver front, it's more in terms of a general geopolitical risk premium. But we've also saw that the US dollar and real yields spiked as a result of an increase in inflation. So gold and silver did suffer as opposed to oil during that period.
Clive Maguchu, is that inflation scenario still in play? So you've got inflation in the United States that's as similarly to Australia, is a bit sticky, and the potential for it to be going in the wrong direction as far as the Federal Reserve is concerned. I'm just curious to know your thoughts about this, because if inflation continues to rise and there's upwards pressure on US interest rates, that tells me that the gold price could potentially fall further from here. It's usually an inflation hedge, but there's that trade-off, isn't there, between the rising interest rates and not wanting to miss out on that yield advantage and getting out of gold. Am I making any sense?
Yeah, yes, you are. I mean, one of the key nuances about gold's role as an inflation hedge is it's an inflation hedge for extreme periods of inflation. So when we get these periods where we have rising inflation and inflation that's just above central bank targets, it's probably more sensitive to the real yield impact from central banks raising rates and impacting the price of gold. So I think it's a good hedge for big spikes in inflation, not necessarily for short-term inflation that's slightly above central bank targets.
The concern that I think a lot of those in the market, in share markets especially, would have is that falling price of gold is telling us, isn't it, that inflation, the inflation problem is not going away. Yeah. We know that there's a concern that the US Federal Reserve might increase rates. What about here at home in Australia? Do you have an inflation concern? Because the banks seem to be going each way with regard to their outlook for inflation and interest rates. What's your view on it?
Yeah, I mean, the inflation data we got this week probably gave both sides a little bit of encouragement. I mean, we obviously saw the headline come down a little bit, but underlying measures still show that inflation is going to be a problem going forward for a little while yet.
Which means higher rates, surely.
I mean, it means that the Reserve Bank will probably be more hawkish, so i.e. like having a bias towards raising rates a little bit more. But we think they'll stay on hold for a little while as they see the impact of the 3 hikes that they've put through the system. We still have 1 rate hike penciled in for towards the end of this year. So yeah, we're probably more in the camp that the Reserve Bank is likely to move with 1 further rate hike.
Pivoting just a little bit to SpaceX, it's had a wild ride over the past couple of weeks, and we've seen it sort of rocket up, pun intended, and come back down again. Are we done with volatility in SpaceX?
I mean, what's been encouraging to see is that, you know, we had probably the biggest IPO ever, and investor demand was very, very strong for that. And that, I think, goes to a broader theme in terms of there is demand out there for AI and tech-related investments. So the consumers and investors are still very much on board with this AI theme. And we think the SpaceX IPO settling a little bit above its IPO price is probably a fair reflection of where investor demand is and the outlook for broader technology stocks.
I'm just going to put it out there. Are we in a bubble?
Well, I think we've had a few, strong results come through from these AI hyperscalers.
You're not giving me a yes or no answer to this,
No,
are you?
I think it is a story that has a lot of fundamental backing. I mean, when we see the results that are coming through, it's hard to go against those numbers that are being produced. I mean, we've had very strong results come through, and markets are just reflecting those results. And I think there isn't, once we see fundamentals decouple from prices, then we can maybe talk about a bubble.
Moving closer to home, for the Australian stock market, are you bearish or bullish?
We're probably a little bit more bearish on the Australian stock market. I mean, obviously, we don't have the AI play in Australia, and we don't have very much of a tech sector. And we've seen a lot of pressure on the big banks given the rate rises that we've seen on this market. So we're a little bit more bearish on the Australian market. I mean, the commodity market will probably do reasonably well, but that's not enough to be bullish on the Aussie market as a whole.
Well, Clive Maguchu, it's always great to get your insights. Thank you for joining the business.
Thank you for having me.